Nilesh Parikh, Associate Director, Wholesale Capital Markets at Edelweiss, joins us right now on the show. Nilesh, I'm so glad to see you. What did you make of the initial numbers of State Bank of India?
Yeah, so I think on headline, though the PAT has come in lower, but it's largely because of the investment depreciation impact that they've taken during the quarter. But I think if you look at the core performance of the bank, has come in much stronger. If you look at both on margins and I think on asset quality, slippages are lower than what we would have expected. The only thing is on restructuring, they'd given a guidance of about 10,000 crores for the last quarter, and out of that, I think about 8,300 have got completed. So that restructuring number is slightly higher, but I think on the overall, in terms of margins, the performance is much better. It's come in much stronger than what we would have thought. Yeah.
Were you expecting the restructured numbers, slippages to be slightly lower than the number that has come out, Nilesh?
Yes, because if you look at the CDR references which have kind of got completed this quarter, the number was slightly lower than the previous quarter. So in line with that, we were expecting the restructuring numbers to be marginally lower, maybe in terms of about 3,000 to 4,000 odd crores for the quarter. As against that, it's about 8,000. But if it's part of the pipeline that has got exhausted, then the numbers are more or less in line with expectations. But if you look at the trend on the slippages, I think that number has come off from the 13,000 crores to about 8,000, which is, I think, an encouraging sign.
I'm just wondering, I don't know how you look at it, but is there a bit of a relief as well, Nilesh? Because typically a management change and the first couple of quarters or the first 3 quarters, you see a lot of damage control being done, and therefore the numbers look really horrible. It's not happened this time around for SBI.
Yeah. So I think that's a sea change than what we would have earlier seen for some of these state-owned banks, where despite a management change, I think you've not seen anything, out of turn for the numbers, especially on the slippages side. So provisioning, for mark to market, I think is something that is broadly yield driven, but otherwise outside of that, I think they have on slippages you've not seen anything outturn, and on restructuring we just probably need to see their guidance or commentary on the pipeline. If they've exhausted the pipeline, then I think this is a pretty good set of numbers from SBI.
Hi Nilesh, this is Poonam here, and just wanted to check with you in terms of how do you see the asset quality. These numbers are in line, majority on the expected lines, just the restructured assets is higher. Do you think that if the management from here on guides for an improvement in the asset quality, do you see further positive performance on the stock price?
Yes. So if the numbers are if there's a positive commentary or at least some bit of signaling in terms of the restructuring pipeline getting exhausted, then I think you will see the stock kind of react positively from here on. Yeah, because I think the underlying margin performance has been quite strong for them.
Okay, and another question is, Nilesh, that the bank has actually increased the base rate by nearly 30 bips since in September as well as in November. So do you see that there is an expectation that the margins will remain probably stable or may react positively going ahead?
Yeah, so this should be the considering that they've taken a base rate hike, I think margins at least should have an upward bias going forward, and given that the cost of funds have stabilized, our sense is that margins should be positively biased. And if this is after a string of negative surprises that we've seen on margins, I think margins at least on the domestic side would stabilize.
Mm-hmm. Well, my last question to you, Nilesh, is that how do you see State Bank of India as a whole in terms of valuations, assuming a slightly improved margins and improved management guidance? Would you remain a buyer in this stock, and what is the kind of upside would you see from the current levels, given the backdrop that we are yet going to see monetary tightening? So how would the view stand out given the backdrop of higher interest rates again only with respect to State Bank of India?
Okay, we have a buy on SBI, and I think one of the key reasons for that is that on the liability side, clearly SBI is the better of the lot, and even on the asset quality, I think it's more diversified. Plus, the restructured book overall compared to the peer set is lower. So in terms of the pain that SBI sees is obviously a reflection of the economy, but overall, our sense is that in terms of margin behavior compared, given that they have a strong retail franchise, their ability to kind of withstand pressures on cost is relatively better compared to the others. So we continue to maintain a buy stance on SBI.
A question before we let you go. I know you'll have to talk to a lot of your clients as well. But, I was very surprised with the way Canara Bank reacted after the numbers. It went up, yes, but after that, the way it came off due to market pressure. Now, just wondering, SBI has come out with a decent set of numbers, probably better than what a few people would have anticipated. I know you're positive on the stock, but just from the near-term perspective, do you think it can maintain the kind of uptick that it has showed right now, considering the kind of numbers that it's come out with?
Too difficult to take a near-term call, but I think
the call than me.
It's directionally, if things were to suggest that they've stabilized, then I think, at least one thing is very clear, that we will see limited downside here.
Great. Okay.
Cool.
Really appreciate you taking the time out and being with us, Nilesh. Thanks so much. That's, of course, Nilesh Parikh of Edelweiss. 2.5% now, and I think the market is just reading one into the asset quality.